Hello traders, Nick Shaheen here looking at Blackberry, which I don't usually do. I haven't done in a while, I should say. Friday, December 20th, stock market had a good day. We're looking at the SPY, had a good week. But guess what? Blackberry is having a better day. It was up 10-12% on earnings. Clearly the expectations were pretty low. The quarter I read kind of mixed. They beat on some things, and long are gone the days of phones, etc. So now they're basically a software company, probably licensing revenue, 280 million, whatever, per quarter. So not a big deal from that perspective as a stock, but it has a lot of people that love to trade it. I've traded, and I learned to exit my trade early because it has the habit of breaking hearts. So you see something, a setup, you go after it, it looks great, and then 180 degrees. So this is a daily chart of Blackberry. By the way, today's video has nothing against it. I'm looking at it as a stock, not a company. So it has some pretty big fans and some pretty big haters out there. So I'm not in the middle of that fight, just helping out a friend with the levels. So the question today is it a buy after this bump? Is this a get up and go? For me, definitely not, and I'll lay out my reasons. But before I do, at the end there'll be a subscribe to this channel pop-up. Hit it, it's free. If you want to join us in the chat, maybe we have a match there. There's also a link down in the description. But whatever I say about this stock today as far as not a buy yet, or at this point, if I'm long it, fine. But if I'm looking to get long it, this is not the time to start. This is not the same as saying short it. Okay, these are two different things. And nothing in here is actually a recommendation to do anything. This is me sharing my idea on the chart. You can disagree with me, I'm sure some of you will. So this is Blackberry for a year. I'm going to get a bigger pen so we won't be as accurate with it. Hold on. Okay, so great bump. One could argue that the breakout already happened down here, and this is just the continuation of it. You get higher lows, bumping on a neckline. They squeeze into a point, and they have to either break out or break down. They chose up. So to start here, no. I know there's a big gap here, but this gap is on earnings. So I don't know what they said on the earnings report, the conference call or whatever. They have to say something to negate whatever caused this. That's reason number one. So I would do my homework there from that perspective. Okay, so they started eating into this candle, which is good. They beat this candle. They started eating into the gap, which is good. But my problem is with this. This was a ledge. So this was proven support until it wasn't. And if I look left, you can barely see it, but this was a ledge back here. So support. Sorry about this. I had a little too much caffeine. Support. And then it was lost. So now, you know what they say, prior support becomes forward resistance, until it's not. So ideally I want them to hit this, come back down a little bit, hit it again, go above it, come back down to it, use it as a floor to start climbing up higher and fill this. I don't think they can rip right through it just like that. Just when I start recording, everything happens around me. Okay, so the other point is, I don't know if you know volume profile. For the past year, this area here, this range, I'm going to try to eyeball it from the left, is the value area. So this is where most of the action has happened. Maybe it's a timing thing or whatever, but all these volume ticks down here, they're transposed over here. So we see, okay, so this level here had a lot of action. This right here, this orange line, is the point of control. This is where most of the action mathematically happened, buying and selling. Moreover, this is the zone. See that little cluster, these three volume bars, is, collectively they're almost the same, and this is where most of the action happens. So this is heavy resistance, regardless of the ticker, if I'm coming into it, it's going to be a breathing point. Why? It's going to wake up whoever traded it and trade it again. So buy, sell, buy, sell, buy, sell is going to create congestion. It's no longer going to be buying overwhelming the sellers. They're going to wake up. Maybe they will. I don't know. But my experience tells me that you usually hit it and slow down. So just from that perspective, I would rather wait to see what happens in the next couple of candles. Now we're going into a light week volume-wise, a short week, the holidays, year-end, posturing, whatever you want to call it. Anything can happen. We just finished quadruple witching. So here's another thing. So I just zoomed out to slightly more than a year worth of data, and now it becomes even clearer. Like right here, this is exactly to the penny where it was today. To the penny. These are not coincidences, and I don't believe in coincidences on charts. And look how much of a V point that was. This was an emphatic buy. Okay, so buy, and then lost completely. They come back to it. Whoever was stuck here, they're going to say, thank you, I'm out. It's not so much, it's usually at tops if they get stuck. So this is more of a stuck statement here. But this is more of a pivot point. This was a sharp pivot back in wherever, last December. That was the Christmas bottom. They got over it. And the whole market had the Christmas bottom. And then they rallied and overcame their ledges from Christmas. This one, from October, this one is nowhere near it. It's still contending with the Christmas bottom it had so emphatically back then. So all these factors tell me, wait out. So to answer the question, is this a buying point, starting point? Heck no, not in my eye. I want to see what happens next. Will they be able to go above it and start using it, or what? So if I was long, I would book and rebuy. That's me. But if somebody wants to hold the stock forever and they own stock and there's no time limit on stock, you can own it until it disappears or until it pays you, fine. If I'm owning options, I may spread the options or book them and rebuy them higher. All depends on what contracts I have and all that. So it depends on personal preference. Somebody can sit on profits and not worry about it. Other people start biting their nails. So it all depends on personal preference. But from the chart perspective, this is too it's too pointy. And to the penny, don't know if I want to buy it here. I'd rather see what happens after that. So Nick signing out on that one. Good chart though.